What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 18th of 2017. Well, folks, today I'm here to talk about one thing that's really been on my mind recently, and that has been the growing institutional interest in Bitcoin and other cryptocurrencies over the past few weeks. It's become extremely apparent not only if you take a look on the change of cryptocurrencies over the past 24 hours, there's obviously more capital coming into the market and more interest coming in to both Bitcoin and other altcoins out there. However, I want to talk about a few things that I know are on people's minds, as well as things that I think not too many people in the crypto space are actually taking a look at that are showing good signs of institutional interest in cryptocurrencies. So let's go ahead and dive through the first and foremost what is on everyone's mind, not only the increasing price of Bitcoin, but what launched yesterday at 6 p.m., and that was the CME Futures. So we already saw the Chicago Board Options Exchange come out with futures contracts. I think it was almost more than a week and a half ago. And we finally had the release on Sunday of the Bitcoin futures traded under CME, and these brought a decent bit more liquidity to the market, a fancy term for capital or volume being traded on these futures. And the reason is because each of these contracts, unlike the CBOE that had one Bitcoin behind each futures contract, has about 5 Bitcoin behind each contract that's traded. So as we take a look here, we can see that the volume candles and the numerical value up here that's along with it doesn't seem too big. But really, if you have, for example, let's keep it just with simple math here. Let's say that you're trading 40 contracts. Well, if each contract has 5 Bitcoin behind it, you're trading 200 Bitcoin worth of transaction volume. So there's some, decent money coming through. Millions of dollars of liquidity are being traded on these futures. And so far, it's gone pretty well. A lot of people I know were eager for me to cover it last night, and I had a feeling they were going to be a lot like we saw with the CBOE futures, so I wasn't so eager to cover it. And even though we had what appeared to be a flash sale, the market was, the institutions were shorting Bitcoin, and not really. They opened up at quite a premium, and because of that, you saw a correction in the price for the futures. It tends to happen. Same thing happens with IPOs. Same thing happens with practically every opening of something that everyone's looking forward to. So futures contracts are trading well right now. It's showing that institutions are still getting a chance at trading liquidity on these markets, and we'll have to give it some time. They just launched, so we'll have to see how the market actually trades them, and institutional investors at the CME start trading futures on Bitcoin. So looks good to me right now. Nothing to fear, nothing to be exuberant about in any sense, but it's awesome to see, in a sense, some institutions coming in and getting a chance to actually trade this and seeing what they think of Bitcoin. Honestly, I don't care too much for Wall Street's opinion, but nonetheless, it shows that there's a sense of interest in Bitcoin and a lot of money that's going to be flowing towards Bitcoin and other cryptocurrencies. However, the topic of focus today is not going to be so much on the futures. The thing I really want to talk about here is something that I bet many people in the cryptocurrency community, even who are watching the charts 24/7, haven't heard much about. And I don't blame them. Markets are quite exciting right now for altcoins, so I guess that's probably the general focus. But there's something I want to talk about today as someone who is interested in stocks. And it is a new IPO that recently launched. Yes, folks, not an ICO. An IPO that launched for Longfin Corp. Okay, so LFIN is the symbol. If you want to go take a look at it for yourself in any charting application, TradingView's got it, just like how you can for cryptocurrencies. You can look at stocks. And Longfin was a recent IPO that launched, and it came to market back, I think, on the 13th, if I remember. Yeah, the 13th of December. So relatively recent. And this chart, we're looking at the 5-minute chart, but we can take a look here at the daily. And I'm going to have to scroll in here because it was so short term. You can see that after about 2 days, this thing just started skyrocketing. Now, many people were scattered as to why this was happening, and it really only takes a little bit of research to know why this happened. We can see it had an absolute crazy run-up of over 2,300% gains within a matter of a few days. This is not normal for an IPO. IPOs sometimes can double in valuation because there's a lot of excitement, but this went up a massive amount. Why is that, though? Why did they have to, go about opening this up, have it run up like crazy, and even have to trigger circuit breakers to stop the trading? Well, Longfin itself is a company that works with micro-lending solutions. And, we can see right here, you probably find the answer right there, blockchain. So they've acquired a company called Zidu.com, and we can see more about this in the article where they explain how it functions and stuff. And I'll give you a little bit of a background about it and then my take. Zidu.com basically helps with micro lending through or against collateralized warehouse receipts. So microlending, collateralized warehouse receipts, sounds very fancy, right? Well, I'm going to keep it very simple and try to break it down and tell you all my interpretation. I might be a little bit off on this. But basically, with microfinance lending, it's ways where you can give micro lending and stuff. You're not giving huge loans. And it's for companies, in the case warehouses or different kind of warehouse-based operations that need lending. And they use what's known as collateralized warehouse receipts. This is a form of lending where the warehouse has a lot of commodities or resources. It could be strictly straight commodities like oil or gold or lumber or wheat, whatever it may be, or a variety of different commodities. They use those commodities or those resources in the warehouse as collateral for the loan they're getting from any kind of bank, or in this case, in microfinance, it could be a multiple amount of shadow banking companies that are a little less regulated and give all different types of loans, where they can receive capital from a lender, and if they can't make back the payment, if that warehouse can't make back the payment to the bank, they can grant a lot of those commodities and resources in their reserves from the warehouse to the lenders. So basically, Zidu is a system where they have Zidu coins, which are an ERC20 token that has a limited supply of 100 million, as a form of exchange or a form of lending to these different kind of warehouse companies. And they can, of course, exchange Zidu coins into Ethereum or Bitcoin, and if they really need to, into capital and stuff, whatever it may be, into fiat currency dollars. So that's generally what it is. This is Zidu right here. You can look it up for yourself and stuff. You can see it has an exchange price, but you can also see, if you come down here, that the price leaped up after the acquisition came through. So not only is the value of the Zidu tokens up, it's also the leading reason why we see Longfin going up like crazy. And a lot of people would say, is Zidu a good company? Is this a good micropayment solution? Is this actually feasible? I'm not here to talk about that. I'm here to talk about what it did to the price. And we can see there's no other reason. This IPO wasn't barely trading. You can see there was little to no liquidity in the market trading it until they announced here on the 15th, and when this article came out, that they'd be acquiring a blockchain-based startup. And that's what's led from this becoming, at around its opening of the IPO, an $80 million company to, at its peak, an over $1.5 billion company. And that speaks volumes. Sure, some of this price action was short-lived, but the mass majority of it is holding. And I don't know if it's going to go down over the next few days. It probably will. But the fact that Wall Street is so eager to trade millions of dollars in volume and prop up the price of this new IPO to a billion-dollar company, almost $2 billion, speaks volumes about the interest of Wall Street and other institutional investors on cryptocurrencies in Bitcoin. And I don't think this is going to stop. You can see, this was just absolute eager pandemonium to get in. They had to trigger, these are all different halts. You usually have halt dates, weeks apart from one another where there's just some crazy gap run up in the market. But this was literally within increments of minutes. So, just absolutely crazy buying action on the side of institutional investors just to get a piece of action in blockchain. It's a buzzword. And not to mention, oh God, they threw an AI in there. They use artificial intelligence in their solutions. So not derailing the company at all, but it was an obvious play that they are trying to acquire blockchain-based startups right after going public. So again, another perfect example here. This is the Bitcoin Investment Trust, and this is a way where institutions, a lot of people have been talking about ETFs for Bitcoin. Well, surprisingly, there actually kind of is an ETF for Bitcoin, the Bitcoin Investment Trust shares. And this is what it looks like right here. This is the price action of it. Of course, as Bitcoin has been going up, we see an increase on the Bitcoin Investment Trust share price. So seeing as Bitcoin has been going up over time, we can obviously see that there's a correlation in the increase for the Bitcoin Investment Trust Fund. It should do that. However, what's interesting is you'll notice that even countering in for the idea that, these are only trading Monday through Friday comparative to Bitcoin, which is 24/7, something's a little bit off in the price. It's quite up comparative to Bitcoin, as you can see, 26 to 27%. And if you even calculate and factor in the closed hours, this still doesn't add up. It's actually higher than Bitcoin. So why is this? Well, we can go over here and we can take a look at Grayscale, which is the company that actually operates these given the given ETF or the exchange traded fund that has ownership of Bitcoin behind each share. So if we come down here, we can see that the each share of the ETF has 0.09196847 Bitcoin, so a fraction of a Bitcoin per share. And each share is trading for $3,000 something. Well, you might notice something right off the bat. The 0.09 Bitcoin are not worth as much as they're trading for. And we can see that in this chart here. So if we go all the way over here towards 12, 15, 17, the last traded day that they have recorded, we can take a look at the differential between two very important values. We can see the teal blue line, that's the market price per share. So what people are paying for a share of ownership in this trust fund, the Bitcoin trust. And then you also have the purple line, which is the Bitcoin holdings per share, meaning the actual market price on maybe whether it be Coinbase or whatever they use as the backup for the actual price of Bitcoin, the actual value of the holdings per share. So that 0.09 Bitcoin is worth $1,600 on that day, and the market is paying $2,700 practically for that given share. So what does that tell you? I don't know about you, but it tells me that institutions are absolutely dying to get a piece of the action. A lot of institutional investors can't go out and go open a Coinbase account or open a GDAX account and transfer client or personal funds over towards any given traditional crypto exchange. What they're waiting for is they're waiting for ways that they can invest into Bitcoin, get a piece of the action, or at least bet on the price action. We've seen that with futures contracts. We've seen that with Longfin, the IPO that just launched and we just took a look at. And we can see it here with the Bitcoin Investment Trust. People in Wall Street and institutional investors are dying to get a piece of the action because this is, and I don't mean to use bubble as a harsh term, it is the biggest bubble in history. This is something that's starting from the ground up. It's based around currencies, and it's this almost new digital, in the case of Bitcoin, a digital commodity. And I think because of that, people are extremely excited and they don't want to miss out on it. It's just like retail investors. Institutional investors are people too, and they want to actually get a piece of the action. So I think this goes to speak volumes here, guys. I think we're just at the start of something much bigger. And it's been making me kind of change my perspective towards this being the peak of the run-up. As much as it looks dramatic and exponential, we might have more room to go. We might go from, instead of just, $600 billion where we're at now, all the way up to $1 trillion valuation. I don't know how fast it's going to go. I don't know if we're going to go higher than that or never really make it there. But I can tell you this. All three of these are perfect examples about how Wall Street is speeding up the process. They're ready to get involved, and you're going to see more and more financial instruments come out that are going to allow them to get a piece of the action with Bitcoin. And I bet you'll see it with other cryptocurrencies after Bitcoin has done it foolproof and through. So anyways, I'd like to get your opinion on this, guys. What do you all think about this? Do you think institutions are, drooling at the thought of being able to invest in Bitcoin, or do you think this is a insider initiative to short the hell out of Bitcoin and knock away all the prophecies of cryptocurrencies and the future prospects that the hodlers are believing in? I'd like to hear what you all think down in the comments down below, no matter where your opinion stands. Nonetheless, I thank you all for watching the video. I hope you all have a wonderful rest of the day, and I'll see you all in the next video. Stay tuned.